Hey everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today, the net asset of my account is 71,176.67. Today, my stock account has made a gain of 0.15%, and Apple has closed up 0.67%. SQQQ closed down 1.22%. Sorry, I mixed up non-stock with SQQQ. SPY closed up 0.29%. United Natural Gas closed up 2.24%. In the past few days, United Natural Gas has been fluctuating pretty volatilely, and I'm also contemplating about whether I should be thinking about selling it. However, as the international political conflicts continue to worsen, it is still possible that the oil exporting countries may manage its amount of oil export and in return control the price of gasoline. And let's take a look at the market today. Dow Jones closed down 0.25%, Nasdaq closed up 0.43%, and S&P 500 has closed up 0.29%. Today, the tech industries continue to lead with a gain, and telecommunications closed up 1.62%, and telecom closed up 1.62%, and household closed up 2.73%. Today, there's a news about the India Stock Exchange index. It shows that India today has made its fourth largest market in just a day before the 1,000-point correction on Tuesday. From the trend of the day, the BSE sensitive index opened briefly on 72,000 points and then ended a continuous all day of decline. In addition to the benchmark, India's beautiful 50 Nifty fell more than 1%, while Nifty Mid Cap 100 and Nifty Small Cap 100 both fell nearly 3% on Tuesday, posting their biggest gains in nearly a month. Today's market performance has led local economic times use the headline Bad Tuesday, which is a statement representing strong emotions. Similar to Japan, the India stock market has saw a historic rally last year, with adjustment pressure earlier this year after hitting new highs. For example, HDFC Bank, India's super financial heavyweight, fell 8% last week and fell more than 3% today, returning to its lowest level since the end of 2022. Today, the entertainment in the media sector fell more than 30% on Tuesday after the company announced a $10 billion deal of the company. In the face of low market sentiment, heavyweights such as Reliance Industries, State Bank of India, Unilever, Hindustan, and the Concentric Bank all collectively performed poorly. It is worth noting that by the close of global markets on Monday, the combined market value of all listed Indian companies just slightly surpassed Hong Kong Stock Exchange. As a benchmark, the exchange is likely to regain its position as the world's largest fourth stock market, as the Hang Seng Index rose 2.6% on Tuesday, and the Technology Index rose 3.7%. However, it is still worth noting that the development of heavy industries in India and its future as comparison to other Asian countries' development. And today, let's talk about the Fed's expectation for U.S. Treasury trading. And currently, the US is pushing for a Treasury bond trading toward a central clearing that will reshape the way for the trading for the Federal Reserve. Washington now is forcing the strictest reform in decades to the world's largest bond market. The SEC chairman, Gary Gensler, said, has led the lead to require the vast majority of Treasury transactions to move to central counterparty clearinghouses to act as intermediaries between the buyers and sellers and assume the ultimate responsibility for the transaction. The process will be implemented in stages, culminating in mid-2026, when all repurchase agreement deals will be included. The repo transactions, a key tool for hedge fund to use in the so-called basis trade, will have come under scrutiny from Washington. This has been one of the most important reforms since the 1991 scandal that involved the now disbanded Solomon Brothers. Once done, it should minimize the risk of contagion arising from a sudden collapse of any financial institution. It's similar to the reform of interest rate derivatives after the collapse of Lehman Brothers that happened during 2008. Because the clearinghouse takes responsibility for completing the transaction, this reduces the risk of counterparty not being able to complete the transaction. The reduction in the systemic risk comes at a price, as the SEC also tight management of clearinghouse tradings. Traders will face a higher risk management cost. And because traders are collectively responsible for any one counterparty's failure, they may also do more due diligence to their clients. New collateral and margin rules may also mean less daily liquidity. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.